Today, we've decided to talk about neutralizing investment risk, which is where we stopped last week. And we hammered on risk because risk is the problem in finances. Risk is the problem in investment. Once risk can be taken care of, then prosperity becomes inevitable. But when risk is not taken care of, you are most likely going to struggle. Most likely going to struggle to make money consistently in the market. So just a recap of what we talked about last week. We said point one, that the creation of risk is the reason why financial markets are created with mathematical intelligence. Two, that the owners of the market used in creating financial markets. So every financial market is created with a mathematical formula, and the reason why they made it so is to create risk. Because if they don't create risk in the market, everybody will make money. And everybody cannot win at the same time. Everybody cannot make money at the same time. When some people believe that the market will go up, somebody has to believe that the market will what? Go down. And as a result of that, one party must lose and one party must win at the end of the day. So that is how markets work. And we said that in finance is called what? Market efficiency. Is that not so? So the second point we talked about last week is that risk is not only against investors, but also against the owners and operators of financial markets. So it's a level playing field for everybody. So it's not like they created it so that they will always collect your money. No. A lot of times too, you collect their money. When you trade with a bank or with a broker, you can win and make money. That money has to come from their pocket. Is that not so? So sometimes you collect their money as well. So, but the truth is that because of the presence of risk, it is not possible to collect their money all the time. So, and this is the reason why we are gathered today, to learn how, even when you are collecting their money, what do they do with that risk of them paying you constantly in case you start winning more times and losing fewer times? How will they be able to pay you that money? There is something they actually do that makes it possible. So we also look at that you will not become consistently successful in financial markets investing if you do not do exactly what the banks and the brokers do to neutralize risk. When you send risk to them, which means when you place a trade and you win that trade, or you buy a structured product and you win that contract, the bank is obliged to pay you that money. So for them not to be affected by them paying you that money so that they don't go bankrupt, there is something they do, which is they neutralize that what? Risk. You understand? So that is what we talked about last week. So now let's look at, before we talk about how banks actually neutralize, even brokers themselves, they also neutralize risk. Before we look into that, let's look at the different types of risk in depth that you are likely to face when you get yourself involved with financial market business. There are different types of risks, three major risks actually, that you will face in financial markets. So what are the three types of financial market risk? The very first risk that you will face in financial market is called what? The trading risk. What did I say? So the trading risk is a trading strategy risk and classified as primary risk because it is an imminent risk. It is something that is most likely going to happen faster than every other risk that you will ever come across in the financial markets. So this one will happen fast, because immediately you place a trade or you buy a contract and you go live on that trade, you are either going to make money or you are going to lose money immediately. Are you getting what I'm saying? So this is the trading risk, is the primary risk in investing in financial markets, because it's an imminent risk. And it is the most dangerous risk, as you can lose part or your entire investment funds within a short time if you apply a bad trading strategy. So this category of risk can only be eliminated through what is called what? Perfect hedging. Can you say perfect hedging? So we are going to look in depth into what perfect hedging is all about. Because if there is a problem, there is always a what? Solution. That you've not discovered the solution does not mean that there is no solution to that problem. True of us. There's always a solution. So let's look at the second risk. The second risk is the credit or liquidity what? Risk. Credit risk is the risk of bankruptcy of the bank or broker you are working with. So spreading your investment across different banks and brokers is called what? Diversification of what? Investment. Credit risk is very important, because if you are investing with a bank or with a broker and that bank or that broker shuts down, closes down, at the end of the day, you will lose your entire investment if there are legal complexities for that closure of business. But if there are no legal complexities, then you will get either part of your money back or your full investment back, as long as that bank or that broker is a regulated entity. So let's move on. Credit risk is classified as secondary risk because it seldom happens. That it doesn't happen all the time. Do banks close all the time? It happens once in a while, and it's not rampant in the industry. So that is why it is classified as a secondary risk. And because of that, and brokers don't close all the time as well, close down all the time. So that's why a lot of people don't really bother about, this type of risk. But it is there and it can happen. So, but should it happen, you could lose part or all of your investment funds if there are legal complexities during shutdown of the company. In the event that there were no legal complexities, you would get back your investment funds either in part or in full through the help of their regulator. So it is very important for you to work with a regulated entity that will limit your risk in financial markets. If you invest money into unregulated hands, then you might not get your money back. So doing any business activity with an unregulated entity or an unregulated person, or doing business that is not regulated by any government established regulatory body, or having a business deal with any individual without a form of legal agreement that is acceptable by a court of law. It is not every legal agreement that is acceptable by a court of law. Writing an agreement with somebody and telling the person to sign on your own does not mean it will be acceptable in a court. Are you getting what I'm saying? A lawyer has to process it, has to approve it as a legal document. Do you understand what I'm saying? So it is very important. So if you do not have a legal document, a legal agreement that is acceptable by a court of law, then this is what the highest level of credit risk that you can take. This is the highest level of credit risk that you can take. Regulation is important in every financial dealing you do in life. And the regulator must be from a government, not private setup. Don't do business with anybody or any company that tells you they self-regulate. Don't do business with anybody or any company that writes on their website or anywhere where they state their regulator and their license, but their regulator is actually a private organization. It must be a government-backed organization to make it a legalized and acceptable regulator for financial markets. Do you understand what I'm saying? Even trade unions, they are recognized and backed by government. So when you are doing any small business and you register with a trade union, the trade union of that business, you are under a legal authority. Do you understand what I'm saying? So anything you want to do in life, you must find out who is the regulator. Who is regulating this business activity? Who is regulating these people offering me this investment product? Who is regulating this company? This office that they set up here, who is regulating it? If there is no government established regulator for that particular business activity, run away from it. You are most likely going to be dealing with a scam. That you are registered as a business with a government doesn't mean you are automatically regulated by the government. When you set up a company and you register with CAC in Nigeria, Corporate Affairs Commission, or you go for a business name, that does not mean that you are now a legalized institution and you can now do business that you are not licensed to do. If you want to do certain kind of business, you must go for the license for that particular business activity after you have been registered as a corporate entity. So somebody cannot just come to you and say we are registered by CAC, and then the person will swindle you to invest with them. You must ask him, after this registration, what is the license for the particular business activity that you are introducing to me? So that you are registered as a business with a government does not mean you are automatically regulated by the government, or that you have been given license to operate that business. That you were able to open a bank account for the company you registered does not mean you are automatically regulated by the bank, or that you have been confirmed as a genuine business. I met someone someday and he said, I was trying to tell you that where you are about to put your money is a scam. And I said, but they have bank accounts. Why did the bank open account for them if they are scammers? I said, look at you. Don't scammers have bank accounts all over the world? Even in America, even in Europe, everywhere in the world, they have bank accounts. Bank is looking for business. As long as you have money to open the account, they will open the account for you. A bank is not a regulator. True or false? So that they have bank accounts does not mean that they are regulated by the bank, or that they have been confirmed as a genuine business. Banks do not regulate anyone. Even scammers have what? Bank accounts. That the entity has offices. I'm trying to clear certain notion that we have here in Nigeria about investments and how you can escape scammers. That the entity has offices everywhere does not mean that the business is what? Legitimate. Someone will say, but they have office everywhere. You can easily go to their office and deal with them. 419 pattern of those days, it's now coming back. 419 pattern of days, they have office everywhere. You go to the office, you sign the contract, you do everything. They will even follow you to government parastatal to sign the contract, but it's all a scam. True or false? So it was stopped at one time, it's coming back again. So we have to be wise. If you collect money, now look at it. Look at the cross logicum of the whole issue now. If you collect money from people for any investment purpose, if he is your own blood brother, when you do not have license, you do a business whereby you collect money from people and help them to invest their money, maybe for a particular returns, expected returns that you promise them. Even if it's your own blood brother, in some climes they allow family and friends investing, but that was before. Now the new regulations states that even if it's your own brother, your own family and friend, you must be regulated to collect that money from him. You must have the license. They have abolished that law of family and friends. Don't wait. Don't show stubbornness and think that nothing is going to happen. Then something happens eventually, you go against the law, something happens eventually, and you find yourself in a court of law, and then the judge is interpreting the law to you and telling you that this thing is in the Nigerian Constitution and it is not permissible. Don't wait until that time, because they will interpret the law to you and you will face the full wrath of the law. There's nothing like I don't know, forgive me. Do you understand what I'm saying? So before you do anything, and don't say because people are doing it, then you must do it. What if it doesn't favor you? What if it doesn't favor you? What if others do it and they get away with it, but when you do it, you find yourself in jail? What if? So these things are very important for us to know. You cannot collect money from anybody, and nobody has the permission to collect money from the public without that person having the right license. So let's continue. So if you collect money from people for any investment purpose, even if he is your own blood brother, when you do not have the license from any government regulator to do that, then you run the risk of being what? Shut down. The next. Also, your investors run the risk of losing their entire monies to the government, as the regulator will eventually shut down such business activity by freezing their bank accounts and transferring all the funds to the government account. When you invest with an unregulated person or a regulated company, if nothing has gone wrong and nobody has complained, or maybe the business is not yet big enough, the regulators might not know that such a thing is going on. But the day it gets into their ears that such a business activity is going on in that country, they will not even go to their office to shut them down. That is not how regulators work. They will not take the police to go and arrest them. No, that is not how regulators work. The way they work is they will first watch them for a while, send them private warning to shut down. If they refuse, they will now go public. They will announce on television, they will announce in newspapers, they will announce in blogs that investors should go and collect their monies from those people, from those companies, and they should not put money in those companies anymore. The Securities and Exchange Commission, a government regulator in Nigeria, they sent out warnings during the COVID-19 lockdown, several times on television, on radio, in newspaper, that people should go and collect their money from, I don't want to mention any company name, from certain type of companies that don't have license from them, that are claiming they have license from them to operate and do what the business they are doing. How many of you heard that announcement? They announced it several times. That is what they do. Even in the UK, exactly what they will do, they will announce it first. If you are not wise enough to go and collect your money after that announcement, the next thing you will see is they will just freeze their bank account. They don't have time to take police to go and start looking for anybody. They will just freeze all their bank accounts in Nigeria. And if you had invested money with that company, all the monies will be lost. Nobody will get any money back. They will send everything to government accounts. So that will be your own personal contribution to the federation. So if you are truly willing to run a genuine and legally acceptable business activity, then you must go for the correct license after you have been registered by the government as a business entity. Correct license is very important. You cannot go and collect a banking license and do Agofure business. Agofure cannot say because they have license to do transaction business, then license is license. They're not going to open bank. Every business activity has a specific license. If there is no specific license for that your business idea, don't do it. Tell your neighbor, don't do it. No matter how sweet it sounds, no matter how profitable it looks like in your mind, don't do it, because when the law comes knocking at your door, you can be in very serious trouble. People still go to jail in this world. So don't think that you can find a way to maneuver yourself out of jail. People still go to jail every day. So if you are an individual, then you must be willing to offer legally acceptable agreement to your customer or partners. So if you are an entity, then you must go for the correct license from the government. If you are an individual, you want to do business on an individual basis with someone, then there must be a legally acceptable agreement between you and that customer or that partner. You too, as an investor, don't put your money into anybody's hands without any form of legal agreement that is acceptable by a court in the jurisdiction of that business. Do you understand? In other words, you must be willing to be under a law. If you want to do business, you must be willing to be under a law that will hold you accountable should you decide to do any illegal or criminal thing with your customer or partner. If I'm not under any law, I'm not under any pressure to deliver, then I can go into any kind of business with you and mess you around and run away with your money. There's nobody to hold me accountable. There's nobody to look for me. I get what I'm saying. But because I'm under a law, it is not like because somebody is under a law, he cannot run away with your money, or he cannot swindle you, or he cannot, but it cannot be that swift. The person will think first. What if I am caught? I can spend the rest of my life in jail. Do you understand what I'm saying? It is not that because banks are regulated, they are under a law, that means they will always do good business with you. The CEO of the bank is seeing all your money. He has control of everybody's money. He can decide to wipe everything out and run away. But why is he not doing that? Some banks in Nigeria are more than 20 years old. Why have they not run away with your money? Why have brokers? There are derivative brokers in this world that are up to 250 years old. Like ED and F-Man, International SC Stone. Why have they not shut down and run away with people's money? Why have they not swindled people? It's because there is a law that they must be accountable to. So it cannot be that swift for the person. The person cannot be that stupid to just, play games with you if he does any criminal thing. So it is not enough to invest with a person or company just because they are paying profits or doing what they said. Scammers and bucket shop companies do this a lot too. That a company is always paying profits and they are doing what they said. You must check, are they regulated? That is the main thing. That they are paying profits does not mean that they are genuine business. Even scammers also pay. Through Ponzi schemes, they pay. Because if they don't pay, they will not get the next customer. So it will not get to the point where they will now be using other people's deposits to service the interest of old customers, to get to a point whereby new deposits will not be coming again. They will now experience what they call cash crunch. And when that cash crunch happens, whatever is left in their books or in their account, they just carry the money and run away. That is the final destiny of all Ponzi schemes. There are still Ponzi schemes even presently today, running today in this country and all over the world, not only in Nigeria. So the risk you run here is forming the habit that they pay profits. That does not mean that they will continue to pay profits forever. That does not even mean that by the time you join, they will pay you. It's not a guarantee. So the risk you run here is forming the habit of being comfortable with unregulated companies until you one day put all your life into an unregulated company that will bring you to ground zero overnight. Do you understand what I just said? You have been working with unregulated companies and they have been paying you all these years. You've made a lot of money out of it. Fine. So you have now formed the habit that it doesn't matter. When they are telling you that this business is not good, no, it doesn't matter. I have made, as long as they are paying, I'm okay with it. You have now formed the habit of believing everything you see. That is how an unregulated company will come tomorrow and you will put all your whole life into it. You know greed. You know how greed works. When you play the first game, you win. Something will whisper to you that, why not play the next one? Share you the old landlord rent. You need to pay. Just play this one. You don't get the money now. You pay your house rent. Sharp, sharp. You play that one. The house rent money will come. You say this thing is working. Oh. Let me play again. That is how greed works. You will always play again and again and again until they will swindle everything that you have collected from them. And that is how the forex market also works. If you go into the forex market to gamble, to trade with a bad trading strategy, the market can sugar you for a while. You play straight, you win. You play straight, the market will go in your direction and you make profit. Fine. Not only in forex market, stock market, all markets all over the world. Then that greed will still push you to, then it will wipe everything in your account suddenly. Because just one bad reversal of the market and all your money is going down the drain. This is how greed works. So when you form the habit, then you are likely to go into ground zero overnight. Either they will run away with your money, or a financial regulator will freeze their bank account and shut them down. So these are the two things that must happen to all unregulated firms. They will either run into sudden bankruptcy, run away with your money, or they may be doing well. The business might be booming and they'll be paying constant profit and they'll be doing well. And suddenly, they will just try to access their bank account and no way, they cannot. The regulator has given instruction through the CBN to shut down all their accounts. You will not get even 1 penny of your money back. This is how people lost money in MMM. They freeze MMM bank account, and that was the end of that business. So let's look at the third type of risk that you are likely to face in financial markets. It is called what? Exchange rate risk. Can we say it together? So this is also classified as secondary risk because it can be mitigated through pegging a forward guaranteed exchange rate in the forward market. I explained this last week. How you can go into the market as an importer, exporter, you peg your price so that no matter what happens, if you are expecting dollars in 6 months' time, and you are not sure what the exchange rate of dollar to naira, you know you don't spend naira in Nigeria, you don't spend dollar in Nigeria, you spend naira. So you exported goods to China, and they are going to pay you in 6 months' time, and you are not sure if by the time they pay you and you convert it to naira for expenditure, whether it will be the same value as it is today. So what do you do to secure? Because if it's not the same value, if naira crashes, then that might wipe out your entire profit and put your business in loss. Is that not so? So you can go to the forward market, you peg a price in the forward market, so that you have a guaranteed exchange rate, so that no matter what happens between naira and dollar, you have your guaranteed rate. You will exchange that money at the agreed rate with that forwards broker at the end of the day. So although this privilege is only available to certain class of businesses like import and exports and other kinds of businesses, it's not available to everybody. Normal investors, you have to understand this. This is very important for every business. Normal investors who must convert their local reporting currency to a foreign currency before they are able to trade or buy investment products will always be exposed to exchange rate risk. And the only way to cover this risk is through trading what? Profits. So it is when you are making profits, that exchange rate risk that you are likely to face. For instance, if you want to trade forex now, you have to convert naira to dollar. Forex is a dollar business, it's not a naira business. You have to convert naira to dollar first before you send to the forex broker to do your trading. By the time you are withdrawing back your money, you converted at 465, and then when you are getting back your money from the broker and you change back to naira, you are now changing at 365. Have you lost money or you have made money? You've lost money. So, but if you have made profits over time before you withdrew back your capital down to change back to naira, then your profits will now be able to cushion the painful effect of what? That exchange rate differential. Do you understand? But it will always be there. The only way to cushion it is through profit. There's no other way except to go and peg your price in the forwards market. And it is not available to normal investors, only available to certain kind of. So this risk is always there. And it's very important for you to know that the risk is there. So these are the three risks. So let's go over them again. The first risk we talked about is what? Trading risk. And how do you take care of that? Perfect hedging. Is that not so? So we'll look at what perfect hedging is all about and how to do that. These are things that banks do to neutralize risk. The second risk is what? The credit or liquidity risk. And how do you curb that? Work with only regulated entities. Is that not so? Then the third one is exchange rate risk. How do you combat that? Make sure your business is profitable so that it can cover for the exchange rate differential that you are likely to face. Now let's go to the next point. How does banks and brokers neutralize risk? Banks and brokers apply two powerful strategies called what? Perfect hedging and diversification of what? Credit and liquidity risk to neutralize risk. These are the two powerful strategies that they apply. Therefore, you too must do exactly the same, but as an investor. If you don't do this, you are going to lose money because there's risk in financial markets. If this is not what you are going to do in financial markets, don't invest a dime. Don't even try it. And in case you want to join our cooperative, let me say it loud and clear that you are not welcome to invest with us if you don't have the mindset to do exactly this thing. If what you are thinking about is something else, then, or you don't have enough money to do these two things that banks are doing, then you are not welcome. Wait until you are qualified. It's as simple as that. so that you don't run into problems. Why would you invest money only to, at the end of the day, lose money? Is it not better you carry that money to ShopRite and enjoy yourself? At least you enjoy yourself with the money. Is it not better you use it to buy a new television set in your house? At least it's something you'll be seeing every day. Than just put the money somewhere, the next thing you throw away the money. Within 2, 3, 5 months, the money is gone. Doesn't make any sense. When you are going into a business, you are going with just one view. To do what? To make profit. At the lowest risk possible. At least your business or your investment should be able to last for years. Not investing and within a few months, you are already, the thing don't they get as it don't they shake. Doesn't work. So you must be willing to do this. So what is perfect hedging? Perfect hedging means to trade in such a way, listen very carefully, means to trade in such a way that enables you to totally eliminate your trading risk by transferring the entire trading risk to the bank or the broker, who will then transfer the risk. Now you see what banks will do. When you make profits, you are giving them risk. Is that not so? So you now, you know that they will transfer the risk. You too, your own trading strategy should be in such a way that it is designed in such a way that you will never lose. Instead, you will transfer what you are supposed to lose now, the risk, you transfer it to the bank. If there is a trading strategy that enables you to do that, you transfer it to the broker. Then the broker will receive that risk from you. Then they will do what? They will still do the same thing. Transfer the risk until to other what? Banks and other brokers. So when you open an account with the broker, you are trading with the broker, you transfer the risk due to the kind of strategy that you will apply. You send the risk back to the broker. The broker will now send it to another broker. If it's to a bank you sent it to, the bank will send it to another bank. That is how they do. They might keep some risk, send the rest. Some brokers will keep some risk, send the rest to other brokers. Then that broker will keep some, send the rest to other brokers. Some broker will keep, some brokers or some banks, it's not compulsory they must keep any risk within them. They can send the entire trade flow to the next party. And then they will keep sending it like that until the risk gets to the desk of who? Let's shout it together. So, and when it gets to the government, through what? Treasury bills and bond buying. So the government is the final absorber of global financial market risk. It is the government. So this is how financial markets work. When they collect the risk, I told you banks are not afraid of risk. Is that not so? They will collect the risk. You too, you should not be afraid of risk. Do what the banks are doing. Develop strategies that will lock in your risk and transfer it to the broker. When the broker collects that risk, they will transfer it, and they will keep transferring it until one of them will buy bonds and treasury bills from the government to mitigate that risk. So the money of financial markets for investors is actually coming from who? From the pocket of the government. So when you make money in financial market, it's not coming from the bank. If it keeps coming from the bank, they will go bankrupt. Do you understand what I'm saying? If it is coming from the brokers, they will go bankrupt. You see this broker, Tickme. They are building in Cyprus alone. It's a skyscraper, glass. A very big company. You understand? They started since 2011. Till now, they are waxing stronger and stronger and stronger every day. Why? Because they are doing this thing. If they don't transfer risk, then you will not probably see their banner here today. They would have shut down. So companies that transfer risk, they are most likely going to have high grade credit rating. their credit risk will be very what? Low. So when you do business with such companies and banks, your investment with them is most likely going to, and if they voluntarily decide to shut down, they can only close down if they voluntarily decide. Are you getting it? I can voluntarily decide to shut down the cooperative and then return everybody's money back. If a bank or a broker decides to self-liquidate, they return everybody's money back. Do you understand? So this is what happens. So the government is the final absorber of global financial market risk. Let's move on. Perfect hedging strategies forces you to sacrifice. Listen to how the strategy works. Forces you to do what? Sacrifice potential huge what? Returns, in order to target the industry average rate of what? Returns, in exchange for safety of your what? Funds. In life, you cannot eat your cake and have it. You want to play safe, you want to make money consistently and be safe in financial market, you want to apply perfect hedging strategies, then you cannot use perfect hedging strategies and be targeting huge returns. It therefore means that you have agreed to sacrifice making huge returns for safety. That is what hedging is all about. But the question is, can you target those tiny little returns and still become wealthy? The answer is yes. It's a $1 billion corporation. Are banks not very successful? How much are banks making? The highest, most performing mutual fund in Nigeria as at 2019 made 11.28% returns in 1 year. Go and check their balance sheet. Their asset under management is over 100 billion naira. And you make 11.8% of 100 billion. Is that not good money? Can you finish that money in 1 year? So if the investment strategy is safe, people will put money into it. People will look for you. I want to invest in that, your safe investment strategy. And before you know it, the asset under management in your name becomes very large, and that will make you very wealthy. So you are now targeting industry average returns. That is what you are looking at now. Do you understand? You are not looking at targeting huge returns, because you are looking for safety. Unlike speculation, speculation is also a strategy, an investment strategy, which means to predict market direction. It's like gambling. In the bid to what? Target huge returns above industry average at the expense of safety of your what? Funds. So these are two kinds. People are playing the same game of trading, but in two different worlds. This one is looking for safety, small returns. This one is looking for huge returns, but it doesn't care. And the truth is this: investors, because in economics, one of the theories of consumer behavior is that consumers are what? Rational in behavior. Is that not so? And one of the rationality of consumer is greed. Is that not so? They always want more. They are never satisfied. Even when it gets to total utility, marginal utility gets to total utility, they are still not satisfied. They still want more. You understand? So, but even at that, investors, a lot of them that I have met, they do not really want, they want to eat their cake and have it. They want a situation whereby their money will be safe. They don't want to lose, but they want huge returns as well. If the returns is not huge, they are not attracted to invest. They want to hear juicy returns, but they don't want to lose their money. The two cannot work together. Cannot work together. It's not possible in financial markets. Do you understand? So when your trading risk is fully hedged, it means that you have zero what? Exposure to trading risk. That is to say, it is impossible to lose money after every trade session if you do not make any mistake in your trades calculations, and there are no abnormal market conditions. Or, in life there is nothing that is absolutely absolute. Is that not so? That it is called perfect hedging does not mean that something cannot affect it. But let it be that what can go wrong will be like 1 or 2%. Are you getting what I'm saying? That is what is important. That banks have high credit rating does not mean they cannot shut down. That they shut down does not mean that you will not get your money back. And also that they shut down does not mean that you will get your money back. So it is a 50-50 chance. If there are legal complexities, you will not get your money back. But the risk, the probability of banks shutting down is very low. That is what we are looking at as safe investment. Not that we are saying that you will never in your life ever have the opportunity to ever lose. Something can go wrong, but let it be at the lowest of the lowest of the lowest probability. Do you understand what I'm saying? So it is impossible if you hedge your trade positions, it will be possible to lose after every trade session, as long as you do not make any mistake in your trade calculations. Also, as long as there are no abnormal market conditions, as long as there is no technology failure from the bank or the broker or the payment systems that you used. So, but the primary risk is the trading strategy itself. These ones are not part of the trading strategy. The abnormal market conditions, technology, and all those other little calculations that you might do as a human being, they are not part of the trading strategy. If the strategy is good, all these other ones can be taken care of. How will you take care of them? Although these things rarely happen, however, in the event that any of them happens and it leads to loss, that it happens does not mean it will even lead to loss. Are you getting it? But just in case it leads to loss, there is guarantee of recovering from the profits of the next trade session. Unlike speculative trading, where you can see 10 straight losses in a row. In speculation, you are gambling. When you lose now, there is no guarantee that when you try that investment again, you will make profit the next time. That is speculation. But with hedging, there is guarantee that you will make profit from the next session. All you need to do is for the things that are likely to affect it, like what? Technology failure, your miscalculation, and what? Any other thing that might happen. If it doesn't happen again, then you must make profit. Guaranteed. And if you make profit guaranteed, you will recover from that mistake loss. Do you understand what I'm saying? Is it clear? So that is the power of hedging. Banks lose. There can be technology problem, there can be something. It also affects them, not only you. They make mistakes too in their own calculations when they collect risk. Are you getting what I'm saying? But because they are hedged, fully hedged, and they constantly make money from the bid and ask price, they always make money from, even if they lose now by mistake, the next session, they just need to wait. They will make money back. They will collect it back. They will never go bankrupt. Hello? Do you understand? So let's look at diversification. I told you the first investment strategy of banks is what? Perfect hedging. The second one is what? Diversification of their credit what? Risk. So let's look at what is diversification of credit risk. Diversification of credit risk means to spread your perfect. I am driving this lecture somewhere. We are going to end somewhere during this lecture. We are getting there very soon. Diversification of credit risk means to spread your perfect hedging strategy. Remember, to spread what? Perfect hedging strategy. Did I say to spread your speculative strategy? Did I say to spread your risk? To spread your perfect hedging strategy across different markets, banks, and what? Brokers. Like they say, don't put all your eggs in one basket. So, but don't put bad eggs in different baskets and expect any good result. Hello? Put only good eggs in different baskets, so if one basket is broken and the egg is destroyed, you still have others to recover from that are still yielding money for you. Is that not so? So that perfect hedging strategy that you have developed, it can be more than one. Not compulsory, it must be only one. It can be more than one hedging strategy that you have developed. Make sure you spread it across different markets, banks, and brokers. Perfect diversification helps you to maintain your net worth for a very long time. So that should any of the markets, banks, market means maybe a particular market, you are investing in treasury bills, forex, stock, different markets like that, futures market, structured products, and there is volatility in any market, and because of that you lose money, or you even lose your entire investment. That does not mean you will go into a room and start crying. You still have investment in stocks, you still have investment in treasury bills, you still have investment in other areas that are perfect hedging based. Do you understand what I'm saying? So it is very difficult for any of these markets, if what you are doing there is perfect hedging, it's very difficult for any of those investments to fail. But what if the bank or the broker offering you that service goes under? We are talking about credit risk now. What if they close down? That your perfect hedging strategy will still fail. Because the bank has closed down and you may not get your money back if there are legal complexities. You were doing perfect hedging there with the broker. Is that not so? And which means your strategy is perfect. But now the broker has shut down. Which means that strategy you are running there has failed, even if it's a perfect hedging. But if you have the same hedging strategy with broker A, broker B, broker C, broker D, broker E, and broker A and B close down, you lose your money there. For example, which is very unlikely if you are working with regulated companies. But just let's imagine that it shuts down. You still have broker C, D, and E. That will still be all of them cannot shut down at the same time. That is what diversification of credit risk is all about. So that should any of the market, banks, or brokers fail, and you lose your entire investment in that space, you still have other investments running profitably elsewhere to recover the lost investments. It is done on the premise that all banks and brokers and markets cannot fail at the same time. Banks do not transfer risk to only one liquidity provider. They transfer risk to several liquidity providers. Do you understand what I'm saying? And they do not offer only one investment product. They offer several investment products, so that in case anything happens to a particular investment product, they will not lack money to pay salaries, to pay tax, and to pay different things. Do you understand what I'm saying? So there will still be money for them to remain afloat. So let's round up this lecture now with our case study. Let's look at, from all what we have been discussing today, but by next week, I will roll out some specific portfolio. Portfolio means set of investments. That is portfolio. When you have a conglomerate of investments, then you have a portfolio. And if all of them are based on hedging strategies, then 100 years time from now, your financial stability is guaranteed. So as an investor, what you are working for is to achieve what? Financial stability. That is the economic value that you should be working for. Not to just make money today. We are talking about being able, in the next 100 years, your net worth is not affected. You have not gone bankrupt. You are not crying of penury. your children and your generation will have something to meet and enjoy. That is what we are learning. So let's look at case study 1. You will answer this question after reading this case study. Mustafa had $1 million and decided to invest all of it into a risk-free product and trading strategy, but did the business with only one company. Mark this case. The second case is Andrew had the same $1 million and decided to spread his risk, and so invested $10,000 into risky products and trading strategies, but did the business with 10 different companies. Sorry, I was supposed to say 100 different companies. If it is $10,000 each, 100 will be 1 million. Let's look at case 3. Mark these cases. Peter had the same $1 million and decided to spread his risk, and so invested $25,000 each into risk-free products and trading strategies, but did the business with 40 different companies. No, 40. It's supposed to be 40, because 40 times 25 becomes 1 million. So I made a mistake there. So he did the business. So the question now is, who among these investors has better chance of achieving financial stability in the long run? Who can tell us the answer? Case 2. Case 2 had, let's go back to case 2 quickly. Andrew had what? $1 million and decided to spread his risk. Is that not so? To spread his what? Risk. And so invested $10,000 each into risky what? Products and trading strategies, but did that with 100 different companies. So is this the best investor? Is the worst investor? Why? But he's diversified. Yes. Yes, I told you to diversify. Yes. How did he diversify? He diversified into what? Risky products and trading strategies. So now you are seeing the thing. Now you are seeing the thing. So who is the best investor here? Case 3, is that not so? What did he do? He invested in what? Risk-free products into 40 different companies and risk-free. So can you please do the same? Ask your neighbor, can you please do the same thing? And ask another person, if you do this, can you ever lose money or never achieve financial stability? If you do this thing, I guarantee you financial stability. If banks can be financially stable, if brokers can be financially stable, you too can be financially stable. The secret is what I've just shared with you. So, any questions? A representative from Tickmill, this broker, he is calling in to speak with us and introduce Tickmill. Also, the vice president of Flatbook Capital will also call. He's a Canadian there in Canada. He has been my business partner since 2010. So he will also call in so that you see him and know that he exists. The cooperative is an international cooperative. We are all over the world.
First of all, thank you very much for this opportunity. My name is Christoforos Panayotou. It's a Greek name, but you can call me Chris. Short name, Chris. I'm calling you right now from our offices in Cyprus, in Limassol. And I am the regional manager at TICMIL for the Africa region. I am responsible for the business development of our company in the Africa region.
Yeah.
We are very, very interested about Nigeria and Nigeria traders. Actually, I have visited Lagos last year. It's an amazing city, it's an amazing country with amazing people. Now, what I want to say is a very big thank you, first of all, to my dear friend Onieka, my partner there, who organized this event with his team, of course. And I would like to thank everybody who attended this event today. I'm really grateful. It is Sunday, it's a family day, and I know that you had to give up your families for 1 hour, 2 hours, maybe 3 hours to attend this event, and I'm really grateful for doing this.
Yeah.
The reason of having those events is first of all to give you the opportunity to learn about Forex, and of course to learn about TICMIL. As I said, I am responsible for the business development of TICMIL in the Africa region, and especially in Nigeria, and we have a lot of plans regarding Nigeria and our traders in Nigeria, which I will explain later. Now, I would like to say a few things about TICMIL. Are you still, can you hear me? Is everything clear?
Yes, everything is very
so
clear. Yes.
Okay. If I may ask, how many people are you in the room now? Because I cannot see you.
Okay, I think we are up to 30, 40, I think so.
Okay, that's good. Now, let me say a few things about TICMIL. We'll introduce TICMIL to you, and we'll say a few more things about our plans, and later I can accept a few questions.
Okay.
TICMIL is already 6 years in the market. In the current situation, we have 3 entities: TICMIL UK, TICMIL EU, and TICMIL Seychelles.
Yeah.
TICMIL is a fully regulated and licensed broker. This is very, very important for you and all traders globally. It is important because when someone decides to get involved in trading, Forex trading, the first factor that he or she should take into consideration which broker to choose for trading is always to choose a regulated and licensed broker. It doesn't matter if that broker has any license or any registration in your country. What is most important is that brokers to be regulated and licensed by the regulatory bodies. TICMIL is regulated by FCA of UK. This is very, very important because, for a broker to be able to obtain the license from the FCA is really very, very, very difficult, and TICMIL has managed to obtain that license. Also, it's also very, very difficult to keep that license, because to be able to keep that license, you need to follow all the rules and regulations for the safety of funds of clients, the trading conditions we offer to the clients. Therefore, what we are doing for us is very, very important to follow all the rules and regulations in terms of safety, trading conditions, and the rules apply in this market. Can you hear me? Because
Yes,
I see something wrong with the screen. Can you hear me?
Yeah, I can hear you.
Okay, perfect. Now, TICMIL currently we employ around 200 people globally. We have around 110 people in our offices in Cyprus. We have also offices in UK, Seychelles, and Estonia. Globally, we are more than 200 people employed by TICMIL, and of course, we have also a big number of partners who are working with us globally. Africa region is very, very important for us. There is a very big interest of new traders and also experienced traders. We have a huge number of traders trading with TICMIL, but we still want to grow business and have more and more clients, traders trading with TICMIL. For us, it's very, very important the education and knowledge about Forex trading for our clients and traders. Why I say this? I say this because we are very, very interested to provide education to traders, especially beginners, because this market, yes, it can be potential, but at the same time, it can be a risky market. And always there is a risk of losing our capital or part of our capital. Therefore, what we suggest to our clients and new traders is that always they need to apply good risk management, and before start trading activity, they need to have some training sessions to get the knowledge and the experience to understand what is the Forex trading. This we wish to provide it through the educational materials we offer in our official website, ticmil.com. You can find a lot of education materials there, but at the same time, through these events that we will be organizing and presenting. This event today, and I really wish to thank Mr. Onieka Alimele again for organizing this event, is for you actually to get that knowledge and some experience about trading, so to understand what is trading, to understand the potential and the risk, so you can decide when to start and how to start. My advice again is when you decide to start, make sure that you fully understand the risk and what is Forex trading about, and of course the potential about it. And because I get very, very often on a daily basis, I get the question, Chris, how much we should invest to start trading activity? My answer is very, very simple to all of you. You should start with an amount you feel comfortable, which an amount that will not create any issues in your life, in your family, if something goes wrong later in the trading activity. An amount that you can afford to invest, and you should always have in mind that this amount you can apply the best possible risk management, okay, so to protect your capital. There is potential, but you need to go through education, knowledge, and get some experience. Now, TICMIL, at the moment, we don't have offices in Nigeria. This is very important. I know that you wish to see TICMIL having official offices in Nigeria for many reasons. First of all, the main reason is for you to see TICMIL, to trust TICMIL, and to know that there is a place where you can visit it, to get the support, the answer to your questions, and of course, anything you might need through that office. At the moment, we will give you the opportunity to have, let's say, this office, this representation in your area through our partner, Mr. Onieka, Together, we will be coordinating those kind of seminars, educational seminars, presentation, those events to bring more knowledge to you, and of course, the support. So, in combination with the different departments we have in our offices, the support department, the back office, our account managers, the team I have here responsible to contact any new client who registers with TICMIL to offer support and answer any questions, in combination with the support that Mr. Onyeka will be providing to you for the next few weeks. I believe this will be a solution for the moment until we move to the next step, to the next level, to have some an official office there in Nigeria, where you can visit it anytime. This will be coordinated, and you will be informed about all the steps that we will take in this direction. For us, I repeat, it's very important to get the education you need. The office, any kind of office, any kind of physical place, for me, yes, it is important, but it's not so important as the part where you can contact us directly. You can contact our partners there, Mr. Onyeka. You can contact us directly. Anything you need, we are here to support you. And I repeat, the regulations and the licenses we have as TICMIL is the best security for you. Now, I'm not going to go into more details about the trading conditions we offer, because I believe at this stage is something that Onyeka will be presented to you. What I want to say is that here at TICMIL, we provide, and we want to provide, and we wish to have the best possible security in terms of our clients' funds. What I want to explain to you is that our clients' funds are kept in segregated accounts. This means that your funds, any client's funds, the amounts that they will deposit, invest for trading activity, they are kept in different accounts, separated accounts than TICMIL accounts. Therefore, they are safe, so anytime client can deposit and withdraw. At the same time, the options, the methods we offer to our clients for depositing and withdrawing their money, again, they are secured options through regulated channels. And what I mean by regulated channels, it means that clients have the option to use Visa or MasterCards, bank wire transfers, Skrill, NetTeller, and of course we have a new option, the Nigerian Internet Banking. All those options, as you understand, they are through regulated and licensed wallets, and of course through the banks, and this is something that offers the extra security I mentioned before. At the same time, from our side, we implement an extra layer of security, which is called 3D secure mode for the transactions of our clients, in terms that
legal complexities.
Yeah.
How do you define that legal complexities? That is one. Then the case studies that you showed us, we had 3 case studies. The last one is like a unanimous decision that we should invest in a risk-free product. But if I get you right, in the course of the lecture, you were saying, if I'm right, is there any investment that is zero risk? Is there anyone at all that is zero risk? Because you said that must be risk-free. That's the third option, the case study. So that's the 2 questions I have for you. Thank you.
Okay, yeah, nice questions. Legal complexity has to do with the events that led to the shutdown of the company or the bank. It can be complex in the sense that, for example, Wirecard, one of the biggest investment banks in the UK, some weeks ago, they shut down, closed down. How come? Suddenly, yeah, I'm good. How are you doing, Jeff?
Doing good. It's a nice Sunday morning here in Canada.
Yeah.
Sure. So my name is Jeff Jolliffe, and I work in Calgary, Alberta, Canada. For those who don't know, Alberta is in the western part of Canada. I work in the oil and gas sector in Canada, and I've worked in executive roles for several oil and gas companies as well as engineering companies here. I also work with Onyeka and act as a coordinator of investors in North America under the direction of Onyeka. I've known Onyeka for a very long time, and since 2010 we've been business partners. In 2015 we set up a couple of companies together in St. Vincent in Canada. And from a trading perspective, I've been doing speculative Forex and stock trading for about 20 years, and found that over that time that it really is a fool's game. Since I've been working with Onyeka, he's introduced me to a lot to hedging. It's been a real revelation. It's truly the only way to make money in the markets on a regular and consistent basis. But not just any hedging. Onyeka has many strategies that are really groundbreaking, and they work 100% of the time. So I hope you guys take to heart every word that Onyeka says to you during these sessions, because his knowledge really is second to none. He's the foremost expert in investing, for sure, that I've met in my career. You sound like you're in a tin can. You sound very echoey.
Yeah, I'm trying to. The mic is on. Okay. Yeah, can you hear me, Jeff? Can you hear me now?
Yeah, I can hear you better now.
Yes, I told them you're the vice president of Flagbook Capital, and told them you've been my partner for 10 years, since 2010.
Yeah.
And since 2015, we set up companies together in St. Vincent and in Canada. So you are the one
That's right.
managing the investors we have in Canada and in North America. So I just wanted to introduce you to them so that they are aware that seeing your picture on our website is not a photo shoot. It's not a made up something. Yeah. So that they can see your face and know that actually you exist and we are for real. So that's the purpose for the call. So because of time, we are about to take some questions. I finished my lectures, so I'll get back to you pretty shortly after we are done here.
Okay. Well, nice talking to you, and we'll talk to you soon.
Yeah, sure.
Okay.
All right.
Bye.
Yeah, bye. Yeah. Okay. We'll be having more foreign guests calling in every week from different parts of the world to speak to us. And so to answer your question, you were talking about legal complexities. Suddenly, money was mixing in their books, Wirecard Bank, and they declared for bankruptcy. The same thing, Lehman Brothers. If you remember, 2008, global meltdown. It was the collapse of Lehman Brothers, one of the billion-dollar corporations in the US, that led to global meltdown. All stock markets crashed. Suddenly, their stock price fell to almost zero. You know, oil price almost went to negative recently, not too long ago. So their stock price fell to almost zero suddenly overnight, and the company had to file for bankruptcy. Because when your stock price crashes, then there is a problem. So That is a legal complexity. When the stock price value crashes to almost zero, then how do you pay your investors? How do you pay dividend? How do you, in fact, the company is bankrupt at that point. It's as simple as that. All your shareholders go bankrupt as well. They lose their money. You understand? So even if their regulator appoints a liquidator to help salvage the situation and bring investors' money back to them, where are they going to get the money from? They need to liquidate those shares in the stock market to be able to raise the money to pay the investors. Do you understand what I'm saying? So if they liquidate those shares, the value is almost zero. They will not get anything out of it. So that is a legal complexity. They are bound to return your money. But when they are not able to return the money because there is a financial distress, that becomes a legal complexity that the company will not be. Even if the court says get the money to pay the investors, they will not still be able to pay. Are you getting it? Because they will not be able to pay. They are bankrupt. So when a bank or a broker goes bankrupt, that becomes a legal complexity. But when there is no legal complexity, which means they were not adjudged bankrupt, they self-liquidated, they decided to shut down on their own, which means they are not experiencing any financial distress. They just want to close down the company, which means the money is somewhere. So they will go there and transfer the money to you, and that will come within the next few days. In fact, if you have a trade, an open position, they will send you an email and tell you, make sure that by so and so date, all your positions are closed. Because if you don't close them, we will close them by ourselves and return all your money to you. That is self-liquidation. When there is no financial distress and the money is there, they will pay your money. As long as they are regulated, your money can never be lost with any regulated company. It is not possible at all. In fact, immediately there's any problem with any regulated company, the first people that comes out is the regulator of that company. They will call the CEO of the company and ask him what's going on. Even if you report to their regulator, you have right as a client or an investor, when you are dealing with a regulated company, to report to their regulator that this is how they treated me, this is what is going on, I don't understand. And I'm asking them for answer, they are not giving me answer to my satisfaction. You can report directly to their regulator. If their regulator is in Nigeria, you can go straight to their regulator's office and complain. They will, through legal means, come to the company and demand questions and justice on your sake. So your money can never be lost when you are dealing. If anybody carries your money and runs away, that is also a legal complexity that can lead to financial distress. Maybe the CEO or somebody runs away with your money. That is not your problem. It is the problem of the CEO. Let him run to anywhere. There is Interpol. They will catch him. Are you getting what I'm saying? So it's not a problem. That becomes a criminal activity. So they will get him.